Guys, welcome back to a brand new video. I'm RexFinance, and today we're going to be talking about 2024 and why Wall Street is going to be wrong again. And the word again is a very important word because Wall Street has been wrong more often than they've been right going into New Year's, and I don't think 2024 is going to be any different. In fact, if you're a Wall Street analyst, I apologize, but in my eyes, that's about as good as being an economist. I mean, it's dumb. You don't know what's going to happen because there's so many black swan events out there, yet you get paid to make forecasts about the stock market. And I think most of you would agree with me, but if you're wondering, okay, what's your point? Why would I listen to you then? Well, you don't really have a reason to listen to me about 2024 other than the fact I'm a 22-year-old that's nerdy enough about the stock market to have a YouTube channel based on the stock market. And in fact, I was very contrarian to Wall Street going into 2023. I thought 2023 was going to be a phenomenal year. I made a video about it. I made several videos about it, but that means I'm due to be wrong. So please take everything I say in this video with a grain of salt. Also, I know a video like this probably isn't going to do as well on my channel, so if you feel so compelled, please hit the like button for me, and if you are new here or returning and not yet subscribed, please subscribe down below and comment what you think is going to happen in 2024. To start this video, let's go back to the end of 2022 and look at what Wall Street anticipated 2023 to look like. Barclays expected the year-end S&P 500 price to be 36, almost 3,700, and the most bullish forecast came from Deutsche Bank. That's a fun word to say, Deutsche. Deutsche Bank had the S&P 500 finishing up around 17%. They came the closest, but even the most bullish of Wall Street analysts was wrong. And in fact, 90% of analysts on Wall Street were bearish on the markets, expecting the markets to have either negative return or much below average returns in 2023. The median forecast on Wall Street was for the S&P 500 to finish at $4,000. What really ended up playing out is the S&P 500 finished at $4,600. Now, I know I'm just picking on one year here, but you can go back like I did and look at basically any year and see that Wall Street analysts more times than not end up being way wrong about what the stock market is going to do in that given year. But for the sake of time, let's just move on to what analysts expect for 2024. As of today, the S&P 500 is trading at over 4,700. And we can see that most analysts are actually bearish again for 2024. Once again, my buddies over at Deutsche Bank are the most bullish Wall Street firm, expecting the S&P 500 to finish 2024 at 5,100. I had to do the math because I couldn't do it in my head, but I don't know if you'll be able to see this. Probably not, but that is 8.5% return that the most bullish Wall Street firm is expecting for 2024. And you can see that actually like half of these firms and analysts expect the stock market to be flat or negative this year in 2024. But the average target for these Wall Street firms is 4,836, which I have to do the math again, but the average anticipation for this year is that the stock market, the S&P 500, is going to go up less than 3%, 2.9%. But to set the stage for my opinion, we need to discuss the last 3 or 4 years. You know, on this channel, I've mentioned that I thought the 2020s could end up being the roaring 2020s as a result of the advancement of technologies as well as artificial intelligence throughout the decade. Obviously, we've gotten off to a really hot start. But let's think back. What all has happened over the last 3 or 4 years? We've been living very dangerously in the stock market and sort of in real life. In 2020, my freshman year of college actually, we had to deal with the first wave of the COVID-19 pandemic. In 2021, we all had to deal with another wave or two of COVID-19. In 2022, Russia invaded Ukraine, inflation soared, and the most widely anticipated recession of all time remained widely anticipated. We never ended up seeing it. And then last year in 2023, it was largely the same story as the year before, but with a few additions. The Gaza war started in October. China fell into a recession as well as Europe. And China also repeatedly threatened Taiwan. We also had Fed policy that was criticized for being too easy during the pandemic and then too tight or not tight enough as interest rates soared, fueling fears of persistent inflation and another recession that we didn't end up seeing yet again. All of this has happened over the last 3 or 4 years, and you know what the stock market has done? Despite the calls for a huge crash and correction and recession, the S&P 500 was up 47.6% from the end of 2019 to the end of 2023. For those of you that like to look at charts, there's one on the screen for you now that shows this. We've had 2 bear markets in the last 3 years, and despite that, the S&P 500 again is up 47.6%. And in fact, we ended last year with another burst of optimism as investors triggered another powerful rally. And right now, I'll admit it, going into 2024, investors appear to be carefree. They have nothing to fear except fear itself. It's almost like somebody famous has said that before. I mean, you can look at any bull to bear ratio you want and see that there's extreme optimism in the markets right now. This was not the case going into 2023. I was one of the very few bulls that actually existed. And while investors' mantra going into 2024 is there's nothing to fear except fear itself, my mantra is there's nothing to fear except nothing to fear. When we have nothing to fear, generally we are closer to a top than we are a bottom in the stock market. And there's a few different catalysts that I think are going to impact the markets, especially in the first half of 2024. At the start of 2023, it was widely expected that the stock market would remain in a bear market for at least the first half of the year, and then maybe we'd see a small rebound to end the year. But as I've already covered, Wall Street was wrong again, and in fact, almost the exact reverse happened, where the S&P rallied by almost 20% in the first half of the year, and then we fell into a 10% correction around mid-year, and then we ended on a huge melt-up through the end of the year for a gain of 24% total. We've already had a few trading days in 2024, and they have been very red days. And my personal opinion for 2024 is I actually believe that what Wall Street thought was going to happen in 2023 is what's going to happen in 2024, where I believe the S&P 500 will stall during the first half, maybe grind slightly higher in the first half of the year, but then really rally in the second half of this year. And let me explain to you why I think that way. The first thing that I think we can expect in 2024, and we've already kind of started to see this, is odds are that Fed officials will try to lower expectations for rate cuts this year. At the end of last year, the market was implying 5 25 basis point rate cuts to the federal funds rate by the end of 2024. However, I'll put it up on the screen. The FOMC released their December summary of economic projections, which only implied 3 rate cuts in 2024. So there's a disconnect between what the Fed thinks right now and what the market thinks right now. It's very possible that the stock and bond rallies that we saw from the end of October till the end of 2023 may have discounted an easier monetary policy this year than Fed officials are likely to deliver, even if inflation does continue to trend down towards their 2% goal. In fact, I believe as long as the unemployment rate remains below 4%, they're likely to hold off on easing. Their worst nightmare is a rebound in inflation, and if you ease too soon, that's exactly what we'll see in the economy. Fed easing cycles are most pronounced during recessions, but I don't expect us to see a recession in 2024, and I also don't expect the Fed to have to ease to avert a recession. On the screen, you can see that the federal funds rate is inversely correlated to the unemployment rate, where when the unemployment rate rises, the federal funds rate goes down. This has been true going all the way back to the 1950s, and I already discussed, I'm not expecting a recession, and in order to see a recession, you have to have unemployment. So I expect the unemployment rate to remain below 4% for at least the first half of 2024, regardless of whether or not we end up seeing a recession play out. I think 4% is a very, very key level for the Fed, and if unemployment does start to rise above that 4% level, that's when we could see a more aggressive easing policy. But again, if we don't see the unemployment rate rise in the first half of 2024, it's likely that the bond and stock market discounted too much easing for 2024, which the stock market and the bond market is going to have to correct. My next concern is politics, right? We gotta love politics, and also the bond market, kind of as a result of politics. I actually believe that politics are going to be a bullish catalyst in the second half of 2024 as we get closer to the November election. But I think politics could cause some market turmoil here early in the first half of 2024. As we go through the years, it appears that Republicans and Democrats can agree on fewer and fewer issues. The two sides right now need to agree on their 2024 spending targets sometime over the next few weeks. Republicans are insisting that they will not agree to any spending legislation and military aid to Ukraine and Israel without the passage of a major immigration reform bill. And this is kind of a problem as the federal deficit continues to balloon, and it's ballooning as a result of the Treasury's outlays on net interest. You see, whenever the Fed raises rates, they're actually hurting themselves too because of the federal government's debt. They have to pay more in interest on their own debt whenever they raise the federal funds rate, which is why naturally over time, the federal funds rate is going to remain very low. But going back to the chart of the S&P 500 again, this little 10% drawdown we saw from August through October was as a direct result of failed bond auctions, where bond yields soared, which took money out of the stock market and led stock prices to decline. I think this is a real potential issue for us yet again here in early 2024. And don't kid yourself, all market participants are going to be paying attention to these bond auctions. If demand cannot keep up with the supply that the Treasury is putting out there, yields will rise again and stock prices will fall. However, I'll put this up on the screen if I can find something on it, but on November 1st, the Treasury and Janet Yellen made an announcement that led to a rally in the bond market, which meant yields fell, which is a big reason why we saw the year-end run in the stock market. The Treasury announced that they would raise less from notes and bonds and more from Treasury bills to finance the government's deficits. You can see this on the screen now, where the increase in T-bills versus the increase in notes and bonds is a $1.5 trillion difference. As of November, the public added $1.9 trillion to their T-bill holdings, and that's in comparison to just $0.4 trillion added to their holdings of notes and bonds. So far, Janet Yellen has been able to work some magic in the bond market, and as bulls, we need to hope that she can continue to work this magic. And next, I would be remiss to not mention the Middle East conflict or war, whatever you want to call it. I do believe this is very unlikely to impact the markets much in 2024, but it is something that could cause some turmoil if it expands more than just in its regional capacity where it's at today. The Gaza war remains a regional war. The U.S., yes, we've responded to different distress calls. We've downed some Houthi boats, however you say that. And Iran has responded by sending a warship to the Red Sea. So far, knock on wood, the rising tensions in the Middle East have yet to impact the price of oil, which has been weak since last fall. And this is largely because supply remains ample and demand remains weak as a result of Europe and China's recessions. However, if these tensions did expand to more of a global capacity, the price of oil would be affected, which could cause a resurgence in inflation and that would also hurt profit margins of companies. Right now, I don't view this as an issue, but it's something I'm going to keep my eyes on. And then lastly, we need to mention China and Taiwan. Oh, lovely, lovely. Right now, a weak economy could be the only thing preventing China from invading Taiwan. That's kind of a scary thought, because what happens when China's economy recovers? Does that then open the door to President Xi to do his invasion? Just recently, President Xi pledged Beijing's reunification with Taiwan in his year-end address, which is just weeks before the self-governing island of Taiwan holds elections for its president and legislature. Yet again, not something I'm necessarily concerned with now, but it's something I'm going to keep my eyes on as a potential catalyst that could impact our markets here in America. But as I put a cap on this video, don't forget what I talked about to start the video. All of the things our world has been through over the last 3 or 4 years. And despite all of that, and despite 2 bear markets, the S&P 500 is up nearly 50% over that time period. And while it's impossible to predict what the stock market's going to do or what the economy is going to do, we can all take our best guess at it. Regardless of what happens, the stock market has always been in a bull market. All you have to do is pull up the all-time chart of the S&P 500. But with that, I'm going to end this video here. Don't forget to comment down below what you think is going to happen in 2024. Hit the like button for me and subscribe if you are new here or returning and not yet subscribed. With that, have a great rest of your day. Stay blessed and keep 10 toes to the ground and your chin up. Peace out.